Hello everybody, it's Nick McDonald speaking. Thank you very much for joining us this week for the ICE commentary on the Russell 2000 and equity markets. Starting here with the Russell 2000, let's just have a quick look at the daily chart. And last week we identified 650, this lower blue line, and then 700, this middle or upper blue line here, as the key areas, the key support and resistance zones that we'd be looking for trading opportunities. And you can see that actually the whole week has been contained within those ranges. So let's just zoom out for a second. Bearing in mind, what we were looking for, we had these lower bands as well. So 600 being the lower support level we'd look to find if price did break down that way. And then up here around 765, the upper level of price got up in that direction. But ultimately, for now, while we're trading close to those levels, we expect 700 to be resistance, 650 to be support. That's what we said last week, and that's exactly what happened. In fact, the low of the week was down around 650, and the high of the week up around 700. If you look at that, you might think, okay, well, it just came down, touched it, and then came back up and touched the top. Not a big deal, not a huge amount of opportunity. Let's just come and look at this for a moment on the 15-minute chart and just look at some detail. So, on the upside, absolutely, there was just this one touch. So we came out, we touched 700, but a beautiful chance at rejection. Bearing in mind, if you've been watching these levels well in advance and knowing that they're coming up, look at what happened here. We came up, we just touched above it, and then we fell, and we fell very hard. About 400 ticks, that is, all the way back down to about 660 before starting to recover back up. And even in the immediate sense, these are 15-minute charts, very, very quickly we fell a long way off that level. But also just come and looking at the lower region in this 650 figure. So from the start of the week, if you look at how many times price tested and found support at that level, it's actually quite amazing that we just kept on finding it all the way through there. A few times we broke it, but quickly rejected it. This is a 15-minute chart, and if you look at that on higher time frame, you'll see no closes down there. You just see lots of wicks, lots of candle wicks coming down there, and then price coming back up and rejecting, providing really, really good trading opportunities around that level. So what am I doing this week? I'm looking for opportunities around these same levels. The levels have not changed. I'm not going to give any different ones. The levels are 700 to the upside, 650 to the downside. If we break 700, we're looking up around 765. And if we broke downwards, we're looking down around 600. These are the key price support resistance levels looking back in time. And actually, of them all, this upper one is actually probably one of the weaker ones because it's only quite recent. So you could in some ways argue it's closer to the current price action, therefore more people will be looking at it. However, if you go back and look at these other levels, they go all the way back into 08, 07, 06, in some cases 05 and 04. These are really, really strong levels where price has been trading around those levels, and there's been major support and resistance back then, as well as in recent times as well. So looking for opportunities around these levels, but now then the question is, which way is price likely to go? Is it likely to break up above 7 or break down through 650, or is it likely to stay within this range? Let's just look at a few monthly charts. As pointed out last week, and worth pointing out again, this monthly chart is still very much intact. It's still very much in an uptrend. So it has had a big pullback. Don't get me wrong, it's had a big pullback here, but it hasn't broken this previous low. Is still a good, strong uptrend, and it's finding support where it should. In fact, it's showing signs of rejecting 700, which is where support was. So if we can get up above 700 for this month and close above 700, that'll be looking very, very positive. But let's just come and have a little look at some of these other cash index markets and look at their trends. Because look at the Dow here, it's very much in an uptrend. It's only pulled back just a little bit beyond 61.8%. And the way you hear this reported in the media and the way you hear people talking about it, anybody would think we've plummeted and given back years worth of gains. In fact, we've only given back a few months worth of gains. We've only pulled back 61.8% of the most recent move up. And that is a very small retracement. That's a normal retracement. There's nothing abnormal about that. So putting this into some perspective, this is the Dow. This is one of the most widely viewed markets in the world, and it's only pulled back pretty much just a normal pullback, 61.8%. Compare this back into the move of 07, 08. It's a very, very, very different perspective, isn't it? Let's have a quick look at a few of the other monthly charts. Let's look at the S&P. It's going to be very, very similar to the Dow. Just pulled back. Haven't actually got a Fibonacci line in there, but actually at the moment where it's at, it would have pulled back a little bit less than 61.8%. So it pulled back beyond it, but it's now up around that 50% mark, right where support is meant to be. And if we just come and have a look at the Nasdaq, this is actually the strongest of all the markets, and still only having pulled back 50%, and now up above that level, really only sitting at around about a 38% retracement. So these markets are still bullish in that respect. In the longer term, they're still bullish, and that's why in the longer term, I still think we're heading upwards. So if we just come back and wrap things up here on the Russell, This is starting to put in now higher lows, and on this daily chart, let's just come and zoom out here. This is a classic turnaround and trend, very much like what happened up here, where price made a lower high and then it broke down right here to a low. Broke down through this level here to a lower low as it broke down through that. Well, now we've put in a higher low here, and if we can break up through this previous high, then we'll be breaking up and we'll be changing trend. So the exact point where the trend changes is going to be around about 717. As soon as it breaks up through the high of that candle, let's get really precise. If it breaks up through the high of that candle, the high is 717.1. So at 717.2, I'll consider this market in an uptrend. And that is the key level, therefore, to be watching. We've got to get through 700 being the major resistance. But then if we can just break up through that high, we'll technically be back into an uptrend. I'm looking for price to come up. I don't think it's going to be majorly bullish in terms of there's still a lot of fear out there in the markets. And any news that comes out, even slightly negative news, is going to have a much bigger impact than it normally would in this kind of market. So I'm being particularly careful. I'm not about to buy the Russell or buy stocks and look to hold them for a very long time. I'm looking to trade to the long side. That's my favoured direction. I think that that's the way we're going over the coming months, certainly, but especially in the coming days and weeks. There will probably continue to be a lot of volatility, and the best trading opportunities are going to be coming around these levels, around 700, around 765 as we get up there. This will provide opportunities long and short, and in between those levels as well, just to be looking to trade within the trend, because price is drawn to these levels. And if we can get up through that level and can break 700, then 717, we're likely to be drawn up towards the 765 level. There's likely to be good trends on the way up, be they intraday trends, or even looking to ride the daily chart trend, but looking to get some direction up towards that level before looking for some short opportunities as and when price gets up there. Now, if I'm wrong on that and price doesn't go in that direction, what will I continue to do? I'll just keep on trading shorts around 700 as long as we're below it, and longs around 700 as long as we're above it. If we come down, I'll be doing the same thing at 650 and the same thing at 600, looking to trade these levels and to trade the trends in between the levels. Hope that helps everybody. Happy trading, have a wonderful week, and I'll speak to you next week.